Let's move right to breaking news. Got some data out on that PPI. Stocks are rallying right now. We've got the 10-year yield falling. So I'm thinking that we've got a number that's a little bit equity friendly here. Let's bring in Jenny Horn, markets contributor here on the network, to help us break this one down. Jenny, what do you got for us on PPI?
Well, seemingly, like you just said, the markets are liking this number, which was a nice contrast comparatively to the jobs figure we did get, of course, last Friday. So the producer price index for final demand did advance 0.2% for December. Seasonally adjusted, we did see that, again, now final demand prices rose 0.4% in November and about 0.2% in October. On an unadjusted basis, the index for final demand increased about 3.3 percentage points in 2024 after rising, of course, 1.1% back in 2023. So the December rise in prices for final demand can be traced largely to this 0.6% advance for the index in final goods, while prices for final demand services actually did remain unchanged. But again, the index for final demand, less foods, energy, and trade services rose around 0.1%, same as November, and prices for final demand, less food, energy, and trade services were again up about 3.3% after advancing about 2.7% in 2023. So within this report, I do think that it's huge that the index for final demand services was little unchanged on a month-over-month basis. A 2.2% advance in prices for final demand, transportation, and warehousing services did help then offset the decline we saw in indexes for final demand services, less trade, transportation, and warehousing for final demand services. Those fell about 0.2% and 0.1% respectively. You look then at the prices for processed good, and the intermediate demand advanced that about 0.3% following no change in November. Leading the increase was actually the index for processed energy goods, which moved up 1.6%, while prices for processed foods and feeds rose 0.4%. So all things considered, I do think this came in below expectations, which is huge. I mean, estimates were calling for 0.4%. Previously had seen PPI come in around 0.4%. Usually the market doesn't tend to move a whole lot on PPI, but I do think that we are so quick right now to write in what the Fed is doing next. There's a lot more scrutiny on this number than there had been just historically. So I think that this is encouraging, again, especially considering the fact that U.S. December core PPI rose 3.5%. Estimates were 3.8%. So as far as I can see, a beat on pretty much all metrics, which hasn't been always seen as a good thing in the last few weeks, as we've been joking that good news is now perceived as bad. But seemingly right now, it's being read that the market is liking this number. So maybe good news is good news for once this morning, Tom.
Yeah, dollar came off a little bit. Treasuries caught a bid, so yields coming off here a little bit as stocks are spiking. I think that core number month over month, flat basically, and a little bit lower on the year over year there for core, positively affecting this market at this point. Jenny, we got a couple news stories that we're going to get to because we're going to break down PPI later in the show in depth with Mike Zaremski. But what's this whole thing about TikTok, Jenny? Are they going to ban it? Is Elon Musk going to get his meat hooks into TikTok at this point? There's a lot of stories floating out there about this.
You know, so if you had said, like, bet any amount of dollar amount on the fact that he will actually purchase Twitter, I would have said absolutely no way. So I see this story and I'm like, I know that TikTok is denying it right now, but you never really know when it comes to Elon Musk. So Chinese officials are allegedly evaluating an option that involves Elon Musk acquiring TikTok if the company fails to fend off a ban from the app, first reported by Bloomberg. But according to these sources, under the plan, Musk's X would take control of TikTok US and run the business together. Beijing officials strongly prefer that TikTok, of course, does remain under the ownership of ByteDance, but the company is contesting the impeding ban with an appeal to the U.S. Supreme Court. Mind you, though, I feel like ban doesn't entirely tell the story because it's not truly a ban. It's basically just cutting off any new users or cutting off basically TikTok from various app stores. So it will essentially just completely shut off any growth to then force the sale to the U.S. is my understanding. But TikTok has denied the report that they're looking at facilitating the sale of the app to Elon Musk. So calling it actually pure fiction. we'll have to wait and see because, again, crazier things have happened. But he's in a position right now where he's flush with cash. I mean, he's worth now roughly $416 billion. So he is in a place where he could buy it. But again, right now they're calling this pure fiction. So I'm sure we'll be seeing some trades that are involving the potential of this, but it's still fairly speculative.
Yeah, the drama around this, I don't know. I just tell my kid, don't ever download that TikTok. He hasn't. It's been great for me. So, we'll have to wait.
Live in the real world. People that are so upset about this is like you probably have too much attachment to this app anyway.
Yes, there you go, Jenny. Nailed it. All right, let's move on to the next story. KB Homes came out with earnings last night after the close, after they pushed the earnings event due to President Carter's funeral last week. But KB Homes popping here in the pre-market, and this stock had been getting hammered along with all the other home builders at this point over the last month and a half due to the fact that interest rate yields are rising. But this was a pretty decent report, right, Jenny?
It was a pretty decent report, especially when you have them report revenue of roughly $2 billion, which did mark 19% growth from a year ago. So not too bad as far as, year-over-year improvement. Net income also rose 27%, while earnings per share rose another 36% year-over-year. So the year-over-year numbers were awesome. Home deliveries did also rise 17% to around 3,900, while the average selling price actually ticked up again by about 3% to 501,000. Net orders rose 41%, reaching roughly 2,700, and ending backlog homes totaled just over 4,400. Now, for the full year, they're expecting housing revenues to range between around $7 to $7.5 billion, and average selling prices to fall between around 488 to 498,000. So that is, I think, hugely encouraging that all demand, like as far as trends we watched in this name, were hugely positive when you look at last year's figure. I know that from following these CEOs and some of the commentary, they've said there's this massive deferral right now where consumers are feeling like if they wait a bit longer, they'll be getting a better deal, they'll lock in a better rate. But hey, I think it's also perhaps encouraging that we're starting to see average selling price uptick again. Not good for us as consumers, obviously, but I think showing that while we're hoping prices normalize, it's not really happening yet, frankly, which bodes well for these home builders, which were really a point of resiliency in 2024. I know we haven't seen that same trend follow really in the last couple of months, but gosh, you look at some of the prices and some of the lack of supply while demand remains high. They're balancing an influx right now so perfectly of like the supply and demand that has been rather difficult, frankly, and they've been able to do quite better than I would have guessed. So I think encouraging that you're seeing pretty much double-digit percentage growth on most of their major financials from their earnings.
Yeah, you wonder, though, that 30-year mortgage rate getting back above 7.1% as of yesterday, according to Bankrate. What type of impact is that going to have on the home builders? Because you got prices still increasing. I know people have jobs. The economy's still doing well. But that 30-year mortgage rate above 7.1%, not good for home builders in the near term. But KB Home getting a nice reprieve, nice little pop today. Thanks to Jenny Horn.